again, that gold is at a new record high. And while people were dumping shares of Newmont Mining this morning and Barrick Gold and Kinross and all these stocks, gold prices were going up. Right? Even though gold initially was down $20, it rallied, $35 from there. Why? Who was buying? Well, who do you think, right? The same guys that were at the BRIC conference, because again, they're not buying the mining stocks. They're buying actual gold. That's what they need. They're not making an investment. They are replacing US dollars with a superior monetary instrument that they can hold in reserve. And in fact, a lot of these countries, China in particular, are encouraging their citizens to go out and buy gold, buy silver, right? Our government doesn't encourage anybody to do that. We try to prevent you from doing that.
As the BRICS Plus economic bloc wrapped up its 3-day summit in Kazan, Russia, the potential for this group to reshape global discussions on governance and economic development is becoming increasingly evident. BRICS has nearly doubled its membership in the past year, with many countries from the global south eager to join. However, the recent summit was notable for what was achieved and what didn't happen. Specifically, there was no further expansion of the bloc. For Russia, BRICS represents a key opportunity to regain diplomatic influence and strengthen its economy after being largely isolated from the West due to sanctions. The Kazan summit brought significant aspects of Russia's foreign policy to the forefront, which could be concerning for those who support the current Western-led order. The bloc denounced the disruptive effects of sanctions on the global economy. It established an alternative financial and trade system to reduce reliance on the US dollar. This shift among BRICS countries focuses on boosting economic sovereignty by trading in their currencies. This helps minimize risks tied to the dollar, such as political sanctions and market fluctuations. While there's talk of creating a new currency, the immediate goal is to enhance the use of existing ones for trade. Some even suggest a return to a gold standard, which could simplify international trade and foster greater fiscal responsibility. If nations like Russia, China, and India were to peg their currencies to gold, it could stabilize exchange rates and make cross-border transactions more predictable. While mainstream media may overlook the full implications of these developments, their significance is considerable. Renowned analyst Peter Schiff argues that the current trajectory points to a gradual decline in the dollar's dominance, giving way to alternative forms of value, especially gold. As more nations adopt these strategies, the long-term effects on international trade, currency valuation, and global economic stability could be profound, marking a significant shift in the global economic landscape. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this.
But if China and Russia want to do business together, or companies, right, the idea is for the buys or sells to either be in RMB or rupee, right? Not in US dollars. Now, because why? I mean, first of all, it makes no sense. Why should two countries that don't use dollars transact in the dollar? Just pick one of the currencies that's involved, right? You got two countries that have currencies. Why involve the United States, a third party who's not even involved in the transaction? Why use our dollars? Use the currencies that you're actually transacting in. And so that is the goal, right? For the BRIC nations to just phase out the use of the US dollar and use their own currencies. Now, maybe one day they will come up with a new currency. I think they should just use gold. I mean, to me, it makes the most sense for international trade to be conducted in gold. That's fair. That's arbitrary. You're not just picking some other, currency, because everybody uses gold. Gold is valuable everywhere, right? Everybody knows the value of gold. Gold is used in every country. And so you can use that. You don't have to reinvent the wheel and come up with a new currency. You got money. Just transact in real money. That's already there, right? You don't have to create it. You don't have to invent it. It exists. It's been here for thousands of years, right? That's what that they should use. And in fact, if these countries decided to go back on a gold standard where their currencies were all pegged to gold at a specific rate, and they kept that, then there wouldn't even be any foreign exchange risk. If the ruble is tied to gold and the rupee is tied to gold, or the zloty or the South African rand, if they're all fixed to gold, then their exchange rates aren't going to fluctuate. And so it would make it very easy to trade. Now, of course, if a government, somehow became reckless and irresponsible, and ultimately they might have to devalue. But if once you get back on a gold standard, you're much more likely to act fiscally responsible, so you don't have to devalue, so you can maintain the relationship that you've established. But in the meantime, what's going to happen is that the dollar is going to be reduced in the transactions. That's the goal. They want to move away from the dollar. And of course, if they're moving away from the dollar in transactions, well, they're also moving away from the dollar as a reserve asset, right? If you're not going to use the dollar as much, if you already recognize the vulnerability, they talked about at the BRIC conference, the political risk and the sanctions and all that. And that's another reason for them to step away from the dollar. So this is going to happen. And it is not an accident, again, that gold is at a new record high. And while people were dumping shares in Newmont Mining this morning and Barrick Gold and Kinross and all these stocks, gold prices were going up. Right? Even though gold initially was down $20, it rallied, $35 from there. Why? Who was buying? Well, who do you think, right? The same guys that were at the BRIC conference, because again, they're not buying the mining stocks. They're buying actual gold. That's what they need. They're not making an investment. They are replacing US dollars with a superior monetary instrument that they can hold in reserve. And in fact, a lot of these countries, China in particular, are encouraging their citizens to go out and buy gold, buy silver, right? Our government doesn't encourage anybody to do that. We try to prevent you from doing that. So this is going to continue.
The dollar's role in the global economy is gradually evolving, yet it is expected to remain dominant for the foreseeable future. A significant portion of international trade relies on a benchmark currency, and currently, few viable alternatives exist. Since 2008, the dollar has notably risen, climbing from around 71 on the dollar index to over 104. Some analysts argue that the extensive global dollar-denominated debt will sustain demand for the currency. However, historical trends indicate that the dollar can still depreciate despite high debt levels, as demonstrated between 2001 and 2008 when it fell sharply despite significant dollar obligations. When businesses settle their dollar debts, they typically convert those dollars into their local currencies, which can lower demand for the dollar. Additionally, if the dollar weakens, it could facilitate debt management for foreign companies, especially if they generate revenue in other currencies. The U.S. is increasing the dollar supply due to a considerable trade deficit, potentially exerting downward pressure on its value. As some emerging economies explore alternatives to the dollar for trade, challenges to its dominance may arise. While the dollar is likely to remain central to global finance, these emerging trends suggest that its position may become increasingly vulnerable over time.
People out there, some of these people are going to be at the New Orleans conference, George Gammon, Brent Johnson, they'll be there at this New Orleans conference, but they're on the opposite side of me, at least in the short run, when it comes to the dollar, right? I mean, I'm out there saying the dollar is going to crash, and they're saying, no, the dollar is going to surge. The dollar is going way up, and then it's going to crash. So they kind of agree with me that eventually the dollar crashes, but they just think it's going to have a huge rally before it does. And I think it's already had a huge rally. I don't know that rally is going to get any bigger. I mean, we have had a big rally in the dollar since the lows of 2008. The dollar index was down around 71, and now it's 104, and it did get higher than that, but that is a rally. Now, obviously, they think, well, the rally could be much bigger. And their thesis seems to boil down to the fact that there's so much dollar debt. And because so many countries have to repay dollar debt, that there's going to be this demand for dollars because I owe dollars, so I need dollars to pay my debt. And the fact that these companies around the world that owe dollars, need dollars, is going to put all this upward pressure on the price of the dollar. And maybe if you just look at it superficially, all these companies have borrowed dollars, they have to pay back their debt. and then if they default on their debt, the people who were owed those dollars aren't going to get them, right? So dollars are going to disappear because companies are going to go broke because they can't afford to repay their dollar debt. And so all this is supposedly going to be bullish for the dollar. And I don't buy into that. First of all, that was true. Companies had a lot of dollar debt from 2001 to 2008 when the dollar index went from 120 down to 70. I mean, that was one of the worst bear markets that we've seen in the dollar. That was an all-time record low for the dollar index. I remember the dollar got down, to just 80 Japanese yen. It's, doubled since then, although it's pulled back from that high. But so the dollar was able to fall in that environment. And, the world still had a lot of dollar debt back then. In fact, the dollar was a bigger part of the global economy, as far as a percentage of reserves or trade than it is now. So it still happened. I think the people that are missing is that just because I owe dollars, I owe dollars to another foreign entity. So let's say, you're a Polish company that owes a German company dollars, right? You just did a deal in dollars, right? You didn't do it in zloty. You didn't do it in euros. You did it in dollars. So there's dollar debt on the books of this company. Well, when the Polish company repays its dollar debt, what is the German company going to do with the dollars? Well, it's going to sell the dollars to get euros so it can pay its expenses, pay workers, rent, dividends, whatever. So just because a debt is owed in dollars doesn't mean it's staying in dollars. So yes, there's demand for dollars to repay dollar loans, but then when people get repaid those loans, they sell those dollars, right? It's not like they're just going to hoard them, especially if the dollar is going down, right? If the dollar is falling and somebody is repaying you dollars, you might want to get rid of them as quickly as you can.
The proposal for a new BRICS currency marks a crucial step in transforming the global financial landscape. As the economic influence of BRICS nations increases, the dominance of the US dollar poses challenges, especially for countries facing US sanctions or dealing with dollar volatility. A BRICS currency could offer a necessary alternative, fostering fairer global trade and decreasing dependency on US monetary policies. This initiative aims to enhance financial autonomy for emerging economies, giving them more control over their economic futures. While creating such a currency will present significant challenges, the demand for a more diversified and resilient financial system is clear. By advocating for de-dollarization, BRICS addresses global imbalances that have persisted for years. What impact could the creation of a BRICS currency have on the global financial system and the dominance of the US dollar? Please share your thoughts in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.